Coming to us from Chicago. Thanks for being on, Oliver. Anything jump out at you there?
Oh, well, just a little bit of weakness in the grain markets to start the week, which is pretty disappointing. We had a strong midweek last week, Wednesday, Thursday, and then saw corn and soybeans really kind of fail out against some technical resistance. For July corn, that 460 level just couldn't chew through that, which I think probably invited some sellers back into the market, and which is seasonally and historically, kind of a softer time of year from here on out. Now, that doesn't necessarily mean that we can't see some gyrations back and forth. In fact, I wouldn't be surprised to see that through this week's trade. It's a little bit interesting of a week. Markets are closed on Wednesday for Juneteenth, and then we've got July options expiration on Friday as well, which could play a role in price action. Just looking at open interest alone, there is a lot of open interest at the 450 puts and calls for July corn. So that's certainly going to be kind of an area of interest for us heading into this week's trade.
Could be a little bit of an anchor there. And then also funds building a little bit more of a shorter position in corn now?
Yeah, funds were relatively flat last week. They're still holding a net short of over 200,000 futures and options contracts. And, when I'm talking to guys about this, yeah, that's a pretty sizable net short position for the funds. But remember, it wasn't all that long ago. It was just back in February where they were short 340,000 futures and options contracts. So they have plenty of room to add. And again, the seasonally isn't a great time of year to get super bullish on corn. So I continue to believe relief rallies are probably opportunities for producers to look at playing a little bit more, being more proactive on price defense to the downside. And I think the same can be said for soybeans as well, for similar reasons, especially with an election looming where we're going to get more and more headlines and jawboning back and forth regards to trade in China and potential tariffs.
And then lastly, the Dome of Doom, this ring of fire, I feel as though it's been a little bit, pushed off into the future just because the air is so unstable. We've had a lot of pop-up showers in a lot of places that weren't supposed to get anything.
Yeah, last night I left my TV out on the deck. I drove over to the in-laws and it got rained on. But it's the same story, just another year, right? It's hot and dry. It's the summer in the Midwest.
Yep, that's right. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope. He's with Blue Line Futures in Chicago. Bring in Oliver Slope, Blue Line Futures. Oliver, kind of turned around a little bit in the meats, or at least the cattle.
Yeah, the cattle had a nice reversal on Thursday and kind of a blow-off in the cash market, which certainly spurred the momentum to the upside on Friday's trade. I think the lack of follow-through is a little bit of a caution flag. It's just amazing how fast the markets can kind of put premium back into the markets once good news crosses the wires, and I think that's probably what we're seeing there. I think overall the fundamental landscape remains intact and fairly friendly for the cattle complex, but there are some other factors in the outside markets that I'm continuing to keep a close eye on. There's a fear and greed index, which is really something to take a look at. It's really interesting. We're seeing a big divergence here. Stock market's at all-time highs, but the fear and greed index is actually reading fear. And I know there's a lot of other questions with regards to the consumer as well and the overall kind of appetite for risk going forward into the back half of the year. So that's going to be interesting. If the consumer really starts to pull back and cuts back on their beef consumption, that could be a big headwind for the market going into the end of the year. Now, lean hogs on the other side, wild trade on Friday, almost a capitulation low where you saw that peak panic and reversal higher. We're trading about $5 off of Friday's low, and I wouldn't be surprised to see this maybe spur a little bit more short covering here through the midweek trade.
Perfect stuff. Great timing. They're about to yell rap in my ear. I appreciate that, but you make some great points about the consumer and all the other things out there that we have to worry about. I know, by the way, we have an election on November, too. Don't forget about that. So thank you very much, Oliver Slope, Blue Line Futures. He's in Chicago.